MACD, Golden Cross just fired, buy. Right now, countless people are entering positions for exactly that one reason, and a good number of them end up stopped out. Why? The MACD Golden Cross isn't a bad signal. The problem is relying on it alone. A Golden Cross simply tells you that the short-term moving average has crossed above the long-term moving average. It tells you nothing about whether the market is trending or ranging, or how strong that signal actually is. In a ranging market, Golden Crosses and Death Crosses repeat endlessly, with no real meaning behind them. Keep getting caught out like that, and you'll start doubting the indicator itself. Today, I'm going to show you how to read MACD the right way, common mistakes, the basics, and 3 real trading strategies. By the end of this video, you'll never look at a chart the same way again. Part 0. The most common mistake. The number 1 mistake traders make with MACD. Watching crossovers alone. Take a look at a chart during a ranging market. Price drifts sideways with no direction, while MACD keeps flipping between Golden Cross and Death Cross. This is called a whipsaw, a stretch where false signals fire one after another. Trade every crossover in that environment, and you're just bleeding out through fees while your account slowly shrinks. In a ranging market, blindly following MACD crossovers can push your win rate well below 50%. You need a filter. MACD Golden Cross does not automatically mean buy, not even close. Part 1. MACD Basics. MACD stands for Moving Average Convergence Divergence. It's built from 3 components. First, the MACD line. It's the difference between the 12-period and 26-period exponential moving averages. Think of it as the gap between short-term and long-term momentum. Wider means stronger trend, narrower means it's fading. Second, the signal line, a 9-period average of the MACD line, which acts as a confirmation of its direction. Third, the histogram, a bar chart showing the difference between the MACD line and signal line. Growing bars mean the trend is strengthening. Shrinking bars mean it's weakening. Default settings are 12, 26, 9, and that's what most charting platforms use out of the box. No need to change them. For time frames, stick to the 15-minute chart at minimum. The higher you go 1 hour, 4 hour, the more reliable the signals become. For swing trading, the daily chart is where you want to be. Strategy 1. MACD crossover plus zero line filter. Add just 1 filter to the basic crossover, and your win rate improves significantly. The zero line is the horizontal baseline running through the center of the MACD chart. When the MACD line is above it, the market is in bullish territory. Below it, bearish. A buy signal is only valid when both conditions are met simultaneously. First, the MACD line crosses above the signal line, a golden cross. Second, that crossover happens above the zero line. For a sell signal, it's the opposite. First, the MACD line crosses below the signal line, a death cross. Second, that crossover happens below the zero line. A golden cross above the zero line means the long-term trend is already bullish, and short-term momentum is now confirming it. A golden cross below the zero line means you're still inside a bearish structure. That signal is far less reliable. If volume is also rising at the point of the crossover, confidence in the signal goes up another level. Entry, close of the crossover candle, or the open of the next candle. Stop loss, 1–2% below the most recent swing low. Take profit, risk to reward of 1–2. If the trend stays strong, consider taking half off early and holding the rest until a death cross appears. Strategy 2. MACD Divergence. Divergence is when price and the indicator move in opposite directions. Bearish divergence is a sell signal. Price makes a higher high, but MACD makes a lower high. On the surface, it looks bullish, but momentum is already fading underneath. That's a reversal signal. Bullish divergence is a buy signal. Price makes a lower low, but MACD makes a higher low. Selling pressure is drying up, and momentum is quietly building from the bottom. RSI divergence tends to be strongest in extreme overbought or oversold zones, above 70 or below 30. MACD divergence works without those zone restrictions and is better for catching early trend reversals. When both indicators show divergence at the same time, the signal gets significantly stronger. One important note: divergence signals a potential reversal, not a confirmed one. Always wait for a trigger before entering. Entry: after confirming divergence, use a MACD crossover or a candle reversal pattern, pin bar, inside bar, as your entry trigger. Stop loss: for shorts, 1-2% above the recent high. For longs, 1-2% below the recent low. Take profit: 1-2 risk to reward as a baseline. Key support and resistance levels also work well as targets. Strategy 3. MACD, Histogram Reversal. This is the fastest signal of the three. You're catching the shift before the crossover even happens. When a trend is strong, histogram bars are tall and wide. When they start shrinking, that's the trend losing steam. The moment those bars reverse direction, that's your entry window. Bullish reversal buy: bars are below zero and getting shorter, then one bar comes in longer than the previous. Downside momentum is breaking down and an upside move may be starting. Bearish reversal sell: bars are above zero and getting shorter, then one bar comes in smaller than the previous. Upside momentum is running out. A crossover only fires after the MACD line and signal line actually cross. The histogram shows that shift happening in real time, one step ahead. The trade-off? Faster signals mean more false signals. Only use this strategy in the direction of the higher time frame trend. If the 4-hour chart is trending up, only take bullish histogram reversal setups on the 1 hour. Never trade against the dominant trend with this one. Entry: open of the candle after the histogram reversal. For a more conservative approach, wait for 2-3 bars to confirm before entering. Stop loss: 1-2% beyond the recent swing high for shorts or swing low for longs. Take profit: 1-2 risk to reward as a baseline. Exit when the histogram reverses back in the opposite direction. Let's wrap up today's 3 strategies. Strategy 1. Crossover with zero line filter. Only trust a golden cross when it forms above the zero line. Strategy 2. MACD divergence. When price and the indicator go in opposite directions, a reversal may be coming. Strategy 3. Histogram reversal. The earliest signal of the 3 catches the move before the crossover fires. With all 3 strategies, always check your time frame, confirm with volume, and make sure your risk to reward is set before you enter. If you want more chart analysis and trading insights, join our free Telegram channel. The link is in the description below. If this video helped you, please like and subscribe. Every subscription helps us keep making content like this.